Greetings, Dr. Jeffrey Scott. This is my weekend market update for January 22nd, 2023. Greetings to all my new viewers, especially those that first met me over the last week at the Wealth 365 event. If you're new to the channel, hit subscribe, and that way it'll show up in your feed. And if you want to know when I post them, hit the alarm and you should get a message. That's me in the lower left-hand corner. I still work full-time in healthcare, although I'm a physician. I'm now working on the services side where I have started or partnered with starting a number of companies, and I was addressing a group of folks for value-based care in New York in October. I titled this, Will Markets Make Another Attempt to Go Higher This Week? Last week, I thought they'd make an attempt to go higher. The market sputtered out. Not a big surprise because we were very overbought. I'll talk more about that as we go. We're at the same place almost this week, but less overbought, so we'll have to see. Disclaimer, this is for educational purposes only. Anything I recommend should be considered in the spirit of education and not investment advice. I am a doctor, not a broker. I have none of the licenses that would allow me to give you investment advice. I am not affiliated with any software vendor, and I've paid for the tools I use. And trading involves risk, and you alone are solely responsible for any investment decisions you make. I always like to look high level at the major markets. Here's a couple of spreadsheets, excerpts of what's going on in the market. Now, the source that I use for this, highgrowthstock.com, treats 5 days as a week. So this was a 4-day week, so this includes the prior Friday. What you'll notice is that on one-day return, almost everything was up. Gold, which has been up for the week, was down a bit. The dollar was down a bit, which accounted for its down for the week. Bonds were down a bit, and gas was down. Everything else was up. Things like Bitcoin up 6%, ARK Innovation almost 5%, FANG stocks almost 5%. So we did see some big moves on Friday. All the major indices were up. Now, if you look over the 5-day period, the only thing that is up is NASDAQ at 1.3. The leader to the downside is the Dow at minus 2.4, and they've certainly been the leaders, or were the leaders, off the October 13 lows. Here's the 52 low dates for the different instruments, and you could see the October 13 low across all the major indexes, 99 days, including weekends and holidays. And you could see that we're up from 10.4 up to 18.8 on the NYSE. So if you want to say we're already in a new bull market, we're almost there if you want to look at 20% being the marker of that. And there are some people out there that are probably the minority talking down the bearish sentiment. From a sector perspective, I'm going to talk about junk off the bottom this week. Well, you could see that especially on Friday, the leader was communication sector, and on the week it was up twice more than anything else, and most of the sectors were down. QEdge, a tool that gives me a sense intraday of what's going on in the market, overbought, oversold, gives me a heads up if I need to do something to adjust my position, mostly position long or short, or how much. This here is a version of the buckets. I'll talk about it in more detail in EdgeRater, so I'll leave it alone right now. But the advantage of this is it's real time. But I'm going to look down here. You can see how strong Friday was. 100% of the sectors were up, 95% of industry groups, 89% of stocks were up. But over the week, it was 60% to the downside on each of those. Up here, you could see communication sector really knocking it out of the park, not just on the week, but on Friday alone. Now, I like to look at the same market internals every week to sort of gauge what's going on. So one thing we've clearly been seeing for the last couple of weeks is rates have eased. Now, they were kind of flat on the week, but the 10-year and the 30-year have come down. And probably the big news on rates to me was the discussion about the 25 basis point raise, which is definitely getting smaller, coming in February. Probably another one at the next meeting, and then a pause. Not necessarily a pivot, because a pivot would mean we're going to go from tightening to loosening. But I think we're getting close to the end of the cycle on tightening. And there's good news and bad news to that, because the bad news is you stop tightening when the economy slows down, and what do you get when the economy slows down too much? You get a recession. Now, speaking of a recession, these are two different measures. On the left is a measure of the tightness of credit. And prior to recessions, 2018, we didn't necessarily get a recession, but what we did get was a pullback in the market. 2020, credit got tight, and we know what happened in February. And look at where we are today, and we've been tight now going back months. So these could lead to further weakness in the market and potentially a recession. If we look at the inverted yield curve, whether it's 10.2 or 10.3, take your pick. Here's 10.2 this week. You could see that we've been inverted going back since July. And now in the 2020, we had a bit of an inversion here, followed by a recession months later. But if you go back in history, and let's look back to 1980, when you get below this black line, you've got an inversion of that 10.2. Notice what happens when you get the inversion. The gray bars being recession. Recessions don't usually occur when you're inverted. They occur when you come out of inversion. So I think there's a high likelihood of a recession. No guarantees. I think you have to put it in the back of your mind and temper some of your bullish enthusiasm that you may be getting in this market and recognize, yeah, we could go to new highs, but we could also test the October lows. Breadth, we're still pretty extended. My favorite one is this thing called the T2121. It's a 13-week new high, new low in the market. And I draw a line here at the top, and this line's supposed to be at the bottom. But when we hit this line, almost every time you see the market pull back. In fact, when we reverse, the market pulls back. Well, we reversed off of an extended level. So we're less extended than we were last week when we were up against that line. That's one that I've realized over the last 30 years, 20 years I've watched it, that really signals something. Now, it's a short term, and we came off enough that we could still go up this week without triggering the reversal signal. I mentioned the buckets for those that are new to me. Imagine you could take all the stocks in any index. So I picked the S&P 1500 because it combines the 400 mid caps, the 600 small caps, and the 500 large caps. So I've got a good view of the market, and I asked the question, if I put a Bollinger Band on every daily chart, two questions. How many stocks are above the midline? In a bullish market, you'll see numbers like 74. Last week at 89 above the midline, that kind of is an extended market, so that was a signal. And then where are they falling? Are they falling at above the bands, below the bands, up at the top? And if you look back a week ago on the 13th, you could see that between the ones that were above the bands and the ones that were at the upper band, you've got over probably 53, 55% of the stocks were at levels where you'd expect them to revert to the mean. So the buckets give me a clue as to what's going on in the overall market, and then the Q edge shows me this intraday. And it's like clockwork. When the Q edge gets up to 65% of the stocks above or below the Bollinger Bands, you're getting to a point where reversal is imminent. Now, we're not going to see a Hindenburg Omen for a long time. Those that don't know about the Hindenburg Omen, it's one of my favorite old wives' tale signals. It fires before every major correction. Fires when there's no correction too, which is why people don't love it. But if you get a second signal within 30 days, it's a pretty accurate signal. And I've learned through the years, and there's plenty of videos I've done in the past, that when I see the Hindies, I pay attention. Now, I wouldn't expect to see any Hindies right now. We actually saw one in December 27th, and if you think about it, the market didn't end the year very strong, but that was a spurious one that has not been confirmed. But the big change here in this column looks at new highs, 52-week new highs. This looks at new lows, and for months through 2022, all we saw on the NASDAQ were new lows, very rare new highs, and what we're seeing now are new highs without new lows. That's different. So if it's different this time, that's why. On the NYSE, you could see we went from new lows and new highs to just new highs. And clearly the NYSE which is up 18% off the October bottom, has been much stronger than the NASDAQ. Now, the next thing is what's working right now, and I'll tell you this is junk off the bottom. Why? So we toss out the tail, we toss out the head on this picture because this tells you over here the number of stocks. So the number of stocks in the last two dots is too small to be reliable. So we would run from in this area down here. So stocks with low ERGs outperformed high ERGs. What is ERG? ERG is a combination of EPS rank, relative strength rank, and group rank. And if growth stocks are leading, you're going to see high ERG leading. If you look down here with performance versus earnings, no correlation between performance and earnings. If you look at relative strength versus earnings, talk about junk off the bottom. Look at relative strength. The worst relative strength led. Now, if small cap growth is starting to work, if ARKK is starting to work, then you are seeing some of the things that have been laggards that would have low relative strength turn around. But this was not a new leaders rally. This was a rally of junk off the bottom. You got to know your news and earnings. I always like to highlight some of the big deals here. You know, the leading economic indicators will be interesting, but it's backwards. All right. Manufacturing and PMI for January services, that's a new data point. Jobless claims on Thursday. First estimate of GDP, that'll be interesting. And then Fed national activity, backwards looking. And then we get to the PCE, price index deflator, etc. And that's one that we know that the Fed watches, so that will be watched intently in the market, and consumer sentiment might be important as well. So this is a big news week, and then next week we'll get the monthly unemployment report, as John Person likes to call the monthly unemployment. Big earnings week, and you could see over on the right, and there are some big players here. Got some regional banks on Monday. I saw strength on regional banks that we'll mention going forward. We got some big pharma, J&J, Abbott Labs. God, that used to be a safe stock with a 3% dividend that really never did much. Microsoft, Boeing, Tesla, Intel, Chevron, Amex, MasterCard. Lots of earnings this week. And as I like to use this quote that I made 2 decades ago, it's a judgment call to hold stocks over earnings. It is bad judgment to not know when your stock's earnings date is scheduled. So we finished the week strong on Friday, but except for the NASDAQ, whether you look at the broad index or the Qs, they were the only things up over the last 5 days. The diamonds were down 2.4%. Big rally in Bitcoin. That will impact other things in the market. Think MicroStrategy. Think Riot, which I don't know if it's called blockchain anymore. Then you could think about weak dollar, not only the strong Bitcoin affecting the miners, but also things like SIVB and Signature Bank. We'll look at Signature, 2 banks that are not reliant upon crypto, but seem to have a lot of crypto investments as well. Now, sentiment's important, and it seems to be bouncing all over the place, and it's bouncing all over the place as we're at critical places on the major indexes. 2 of them, the spiders and the Qs, are below trendline resistance, and these are the mother of all trend lines, folks, while the diamonds and IWM are holding above them. Which way is going to win? I guess all things considered, when you figure that we just had Davos, we've had a lot of negative talks, we had negative earnings, big time from Goldman Sachs, lots of layoffs. The fact that the market's held up this well is perhaps a positive. My stance hasn't changed. I'm leaning long, but keeping a high cash position. The weekly market timing signal is now long across all 4 major index ETFs, so I have to respect that. But I'm also in the camp concerned about potential retest of the October lows, a recession, and thus I'm keeping cash on the side. Now, here's what that means in English. Market does good. I continue to put more of my cash at work. Market sells off. I continue to take profits. I have tight stops. So that cash position will lower if the market holds up, and it will get bigger if the market trades sideways to down. Just want to remind everybody, and this was a bobblehead doll, whatever they call it, that I got from when I sold one of my companies from the bankers. But the stocksanddocs.com daily market analysis. Love to have you come check me out on a daily basis. I usually do them the night before, send them into the team, and the team posts them before the market opens on Monday or whatever day I post. All right, time for the chart. So we're going to stick into wealth charts today, and part of it is because that's the feedback I get, and the other part is sort of on a little bit of a wealth charts run after the Wealth 365 event, and I suspect I've got some people that met me there. So I'm at 16 minutes on the video. I probably have about 15 more minutes to go, and I'm going to condense my nightly review, which I usually spend a half hour, into these 15 minutes so you could see how I look at the markets and how I do it quickly, find about 5 things to follow when the market opens on Monday, and then go play with my granddaughter. So let's start with the markets, and let's just enlarge the spiders. Here is the mother of all trend lines. Why would I say such a thing? If you look at the top of the market on January 4th, 2022, so we failed at this point once. We failed at this point twice. We failed at this point 3 times. We failed 4th, and now we're in number 5. Now, what's interesting, in number 1, you see the yellow line crossing below the red, so the MACD rolling over. In the next failure, the yellow line crossing through the red line, so a MACD bearish cross. In the third one, the MACD, the yellow's crossing through the red, so MACD's crossing down. In the fourth one, the MACD's crossing through the red. But look at the fifth one. Yellow's above red and separating. So rather than seeing the transition from the green to the red histogram, we are in a green histogram. This one is clearly different. Now, will that be enough to put us over the top? I don't know that. But if we do, I'm going to look for it to break out, retest, hold, and then go higher. Now we got another thing at work here, and that is this wedge. And this wedge would say we're getting to the point where this market's going to break out or break down. So there's a lot of things happening here. And then I could even look at this and say, here's my inverted head. Here's my left shoulder. Here's my right shoulder. And you've probably got a head and shoulder neckline in here as well. You could probably draw it in a number of different ways. Maybe it's here. But that is a potential bullish add-on as well. I think we're at a fascinating time for the spiders. Eventually we're going to break out. Why not this time? And that's a bullish argument. Qs, same story. I'm not going to go back and study this, but you could see we're right up at that trend line. And notice this other line here, the red line is the 200-day moving average, and we're right up at that on the spiders. Diamonds look different. Let's blow this one up. The diamonds have been where the strength has been, and this was their trend line off of the January high. Retest and fail, and breakout. Notice it's not uncommon to pause before we broke out. We then retested, and now we retested again. More bullish, we're above the trend line, we're above the 200, the 50 is above the 200, so you had the golden cross. I'd like to see price get above the 50. So diamonds look better. Look at what the Russell did. Here's your trend line, broke out above it, successful retest, and holding above it. So 2 below, 2 above, who's going to win? VIX is not doing much of anything to talk about, and the dollar is trading sideways. Commodities, I am not, well, I'll do this, and then when it if it causes issues, I'll undo it. Let's just quickly open up and get my Tastyworks. I go write my password down, lots of asterisks. How many is the question? And you could see here that weak dollar, you'd expect gold to be up. Gold is in a wonderful run. Silver, which led off above that 200, is going sideways. Oil had a nice week, and you can see oil broke above the 50, end of the week with a 1.3% and a 1.5%. So almost 3% over Thursday and Friday, and making up for what were some pretty big losses on Wednesday of nearly of over, a big drop of 2% on Wednesday. Natural gas would be in the dead to me, dropped 34 down to 10.26. And notice how even the monthly bongo is red. Just 3 trend time frames, daily, weekly, monthly, all downtrends. 10 years sold off. It's bouncing here off the 200 area. Really didn't do much, but it was up on Friday. This market has really responded well to falling dollar and falling 10-year. Be nice to see them. Weekly market signals, just to review, there are 2 indicators that you need to see on this chart. Let me just show you here. One of them is the WMA, and that WMA is set at 30 periods. This is a weekly chart. Keep that in mind. The other is a single time frame bongo. Since it's a weekly chart, it will be a weekly setting. If price is above the moving average and the bongo is green, then you can be buying. So spiders, IWM, and diamonds have all been strong for a few weeks and are all in buy zone. Interestingly, they all teased us and then had the wonderful move up on Friday. The NASDAQ actually closed above the WMA and was green on the bongo. So I would say from a direction, the market timing signal is positive across the board. From a conviction level, I'm going to be in the camp of maybe. I'm not fully convicted, but I'm not going to look at short positions. And when I say I'm not fully convicted, what it probably means is I'm not going to be levered up and fully invested at this point. Just want to show you something for non-believers. Here are 3 recent bear markets and large corrections: 2002, 3, 8, 9, 18, 19, and 20. Notice that the markets at their highs broke in each case below the WMA. Notice that once it broke below the WMA, you started seeing either isolated period of red or choppy. Remember, you need both price above and the right color, green, to not be considered in a negative market. But what's more important is notice how they all resolved. Price above the 30 WMA, and you could bounce around that for a while. Bongo green, off to the races. Prices above the 30, bongo green, off to the races. Prices above the 30, bongo green, off to the races. Price above the 30, bongo green, off to the races. Now, you don't have to be the first one in, and no one says you can't start buying earlier, which I usually do, but I don't get my conviction until I'm above and running. So I think this is a wonderful indicator, and it's constructed at no cost for you inside wealth charts. Market theme over the longer period of time, we saw in both 2021 and then pretty much maintained in 22 that large caps were where it was at. Of late, we've seen the curve start to trend down, and if you look at really short term, we're clearly favoring small caps here. All right, so large caps and value, when you're in the lower part, you're favoring value. Large caps and value have been what's been in vogue. But I think right now you could say that we're starting to look like small caps are taking a bigger role. And are we starting to see some movement in growth. So this is a change. If small cap and growth are starting to wake up, maybe it is different this time. And those are the maybe it's different this time are probably the most dangerous things you could say because it usually isn't. But 1, 2, 3, 4, and now 5. We're not going to zero on the spiders. You could take that one to the bank. Um, Eventually, we're going to break through. So why not this time? I don't know. Something to watch. Let's look at the spiders sectors hourly. Someone asked at Wealth 365, if you are a swing trader, position trader, you hold for days to weeks, why am I looking at hourly charts? Great question, because I'm not buying these charts. What I'm looking at is what's changing. Is there rotation in the market? So is there rotation? When I see that 2 weeks ago, 3 weeks ago, communications was the weakest group, and now it's got a star, that's rotation. When I've seen financials sell off over the last 2 weeks, rotation. Industrials were leading this market higher. Now in the last 2 weeks, they've sold off, rotation. If this was a bad market, the staples should be leading, not lagging. So bears, staples do well. Staples are hammered. Bears, utilities do well. They're hammered. So healthcare, which was leading in a tough market, healthcare usually holds up, hammered. Then what's working? Discretionary technology, communications. Does that sound like we're going into a bear market or a bigger bear, or does it sound like we're coming out of it? I think that's called rotation, folks. That's why I like to look at this, and it gives me a sense of where I might want to play. And materials have maintained its strength for some time. All right, bull scanners. I'm not looking bearish this week, so let's start with, what did I do here? Bump, 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 bump. I got a lot of stuff here, more than I want to see, so let me stop it and redo the slide. Okay, I fixed my chart up, so let me just show you what I've got on my chart. A lot of people ask. So in the price, I have 3 simple moving averages. The green is 17, the yellow is 50, and that one, the one is supposed to be red, so let's adjust that. Let's see, this is the 200, and we want that to be red. There we go. So here's the 200, the 17, and the 50. The red and green dots are the wealth signal in the standard format, and the triangles are my EMS signal, which is a marketplace indicator. Red is down, green is up on both of those, and then I have volume. That's it in this picture. This is my dots, so remember there's potential here for 4 dots. Don't see a lot of gap ups on this puppy, so I'm not sure we'll see the 4 dots. Well, up here is the gap up dot. The second dot down, which will be the first dot over here, is the big volume. You see the volume. The third dot is a breakout from chop, and the fourth dot is momentum. Next, we have 3 bongos, daily, weekly, monthly. This is the high-low oscillator, which is my overbought, oversold. And these are 2 standard indicators, the relative strength with WMA, which is in the so it's the spider versus what I'm looking at versus the spider compared to its moving average. There are no settings on that. An OBV with moving average, and I adjust it to exponential 10. So now let me scrunch things around a little bit to the way I like them here. And that's basically what's on my chart. And I'll from time to time play with other things. All right, so heat map. S&P 500, you can see how strong Friday was. The NASDAQ, which was a leader, if we look at the NASDAQ 100, very strong. If we look at Wealth Scanner, what's working is gas, bearish dollar, biotech, gold miners, social media, China, communications. Okay, notice none are above 800, and we've got some some heat around gold miners and the biotech, which means they're moving up fast. Now, typically I will sit here and I'll just look at stocks from the CAT scanner, but I wanted to call out some things that I like. If gasoline is strong, I showed you oil's moving up. What do you think works in gasoline? Well, how about a refiner? So let's look at Phillips 66. Now, the thing about refiners, I just want to point out to you, and this is from MarketSmith, and I use this mostly for some from fundamental screening, but also to look at earnings. And you could see they peaked their earnings at $19 annually in 2022. So you might see some of this filter through to quarter one. Earnings are dropping. That's a concern. You wonder when you see 240% earnings per share growth why you see a multiple of 6. Well, that's because it's a refiner. When I look at the weekly one, I could see that it ranges from 4 to 55. So the multiple at 6 is at the very low end of multiple. It pays a 3.6% dividend. It's still got amazing earnings. And then you look at the chart. Uptrend, pull back to support, breakout. 17 is still under the 50. That'll probably cross through this week. But a breakout from chop. You had the breakout occurred yesterday, Thursday. You had momentum on Thursday and Friday. 2 momentum days in a row like we saw back here are often meaningful changes. So that's something I like. And if we look at relative strength and on-balance volume, we've broken out on both of them. PSX looks like a wonderful way to play the refiner space, and it has a 3.6% dividend. Now, another one that looked interesting by chart, and I'll contrast it of why I liked PSX more, is PBF Energy. Similar chart pattern, actually even better. It's break further above the 50. Coming out of a squeeze, we like that. Relative strength turning up OBV, so this one looks really good. It doesn't pay a dividend. That's the only difference. They're both in long-term uptrends. I also like MLPs here, and at the risk that these things have run some, you could see very, I guess you could say loose chart, and at the height of the range, so that's a concern. But this pays a nice dividend. It had high value, a breakout signal here because these are both closes in the bottom because they're red. So I like these as well. I like dividends, and maybe it's because I turned 65 in a couple of days and I'm thinking about that. But if I'm worried about the market, sometimes the dividend players will hold up. This one pays an 8.3% dividend, which is why I have it. And another way to play this type of a market with energy is to look at something like ConocoPhillips and integrate it. So you have transmission like ET, you've got refiners, you got gas stations, so marketing, and you also have some exploration and production. Wealth signal here fired. Notice the EMS signal fired back here. One dot in a squeeze. That dot is the breakout dot. And doesn't look like much, but relative strength did come up above its moving average. So I like ConocoPhillips as well. And just keeping with the theme about paying a dividend, its dividend is 1.7. So the energy complex looks interesting. Now, the next one was biotech, XBI. So I went to my CAT scanner and I found my group that I created called Biotech and Drugs, Biotech and Pharma. And I have my CAT scanner set up, price and volume that I want, at least a bullish dot, no bearish dots. I'm looking for recent short-term reversals, so Bongo flipped within the last 2 weeks or 9 trading days. And I want daily Bongo green and weekly Bongo green. So I get a small list, and the one that looked the most interesting was Mersana Therapeutics. And what I liked about this one is a nice bounce, took out the 50, 3 dots volume, breakout of momentum in a squeeze, relative strength and OBV turning up. Um, we'll see if this one runs or not, but this one looks interesting. I haven't looked at macrogenics in a while. See, I like Mersana because even though this one also has a favorable pattern, it's still not above the 50. On the gold, gold has been up now for so long. Can you still find stocks that are not extended? Well, let's take a quick look at gold and silver, and you could see only a couple pop up, and AEM probably was one of the better looking ones. Now, if you want to know why I use my high jump, you notice when I touch the high jump, it says 65. It's not extended too much. So when it gets to 100, the distance between price and its moving averages is at a level that you expect a reversal. So it's had a big run. That's the problem with a lot of these. I've actually, boring, have just been playing GLD because I couldn't pick which one I liked. And, GLD is actually doing quite well. The next thing I did is I brought up my combo list, which will be in the YouTube comments area. And my combo list I've built this from a lot of different lists I subscribe to. And so they're technically and fundamentally strong stocks. It's usually a good place to fish. The first one I want to mention is Netflix. Congratulations to the people in my meeting, especially if you took me literally. When we had the meeting at the beginning of December, Netflix was in this area here, and we talked about Netflix seasonality, which is super strong with Q1 earnings, which just came out. We talked about how you don't wait until earnings come out because of late. Netflix started moving earlier. I also said wait till it came down to the bottom of the channel to buy it. I know some people bought it at the meeting. The time to buy was probably around January 4th, and you could see Netflix had a huge run. And why were we looking at Netflix? Because if you look at seasonality, this is my favorite trade of the year. And if you look at buying it, even now too late, the 18th, which would have been Thursday before earnings, selling it the 22nd, 9 out of 10 years higher, 9.68% return. If you could go the horse track and know that your horse would win 9 out of 10 times, you think you take the trade? That's why we took the Netflix trade. Now, would I keep holding it? No. I actually put out a note to the attendees on Friday morning, take your victory lap and take some off. It actually traded higher after that, so hopefully I didn't read my note, but I think you got to be happy with where your Netflix is, and it's getting extended. Notice where the high jump lights up. When it's at 100, it's a level where historically it reverses from, and it's getting right up near the top of this trend line. So Netflix looked awesome, but we're not going to chase that. And then I noticed the next one was OZK, Ozark Bank. Now, as someone pointed out, Wealth Chart, yes, it had an EMS signal fire here. I bet we'll get one upside on Monday if it's up. 4 dots, you got to pay attention. Gap, volume, breakout, momentum. Both daily and weekly bond will turn green. And look at high-low, still isn't a problem. It's at 33. Relative strength and OBV turned up. And then the next one was Regions Financial. Also in a negative EMS, so that would be bothersome, with 3 green dots. That looks interesting. And the next one is State Street Corporation. That one looks even better, breaking out to recent highs. In fact, you got to go back to at least April to have overhead supply. And I'm thinking if I got 2 out of these 3 have 4 dot breakouts and look great charts, maybe I should be looking at regional banks. So we can flip this to regional banks, but let me just show you the ones that I liked. And this, I mentioned before, crypto's working. There's 2 crypto banks that I follow. There's probably a lot more. One is called Signature Bank, and that's they have a lot of investments in crypto companies, and they have crypto. Signature Bank and SIVB, which I think is Silvergate, both had great earnings. And with crypto going up and with their earnings out of the way and still positive, which means in the FTX disaster, their companies did not get destroyed, you might want to be nibbling on these. This is a way of playing Bitcoin and crypto. And a breakout above the 50, You've got a huge move to get to resistance at the 200. You had a momentum and breakout. Both your OBVs, excuse me, both your bongos are up. You're at minus 13 on high jumps, so you're not extended, and your relative strength and OBV are turning up. So I'm going to be looking at SBNY. I'm going to be looking at PSX, COP, and I think there's plenty there. Also Mersana to be looking at. And lastly, let's just go back to that combo leaders list. And Adobe looked interesting, and it does look interesting here. Coming up, daily, weekly bongo are green. You had the reversal back here on the 9th, which is what I required. So pull back into support. Now it's moving. A well signal, an EMS, OBV, and RS heading up. I really like this chart. The reason why I didn't jump and show you Adobe as my first choice is because it's sitting right below the 200. And then the next one up 10% higher is the red line, which you'll see was resistance, resistance, support. And I think that's going to be a meaningful line to get through. So Adobe looks good, but it's got a limited run. And there's a Mersana. Lastly, let's just look at Google. Google is about 7%, 8% from that 200, and that might be worrisome. But you had 4 dots between the last 2 days coming out of a squeeze. The weekly bongo turned green. Relative strength and OBV look good. Here might be a way to play communication. So I went a little bit longer because I started talking too much. But this is it. Now, I started that at 14 minutes. We're now at 41 minutes. So what I showed you is how I do the whole thing in 27 minutes. I got 6 things to go look at and set up some trades. Stops are your friend in this market. You got to use stops. I use a buy stop to get in. Typically, I want to see them move up into my buy stop. And the minute I set a buy stop, I put in a sell stop. And someday we should talk about how I do my stops. Have an awesome week.